Hello, Dosto. I know you've probably been seeing the market going crazy. S&P 500 were down for like 5 days, up for 1 day. Same thing with NASDAQ, down for like 4 days and then up for 1 day. And you're going, okay, where are we going? Are we done with all the crap with the inflation and tariffs and all that, and we're ready to move up, or are we going back down? What's really happening? Markets are always confusing. This time is no different. And I'm going to talk a little bit about as to why that is, why when all the signals are pointing that market should be going down, why is it not going down, and what's holding up the market. So I'm going to talk all of that about in today's video, and hopefully that will give you a little bit better clarity as to what's happening in the market. And a lot of this stuff, I, by the way, share it in our free WhatsApp group as well. So if you're not part of that WhatsApp group, then reach out to me and I'll be happy to have you join that group. But just let me know why you want to join it. That's all I need from you. But send out a message to me. I don't know if you take a look at the Bitcoin price today. I think I'm looking at it right now. It's 116,500 right now. That's just awesome. 116. I mean, that just tells you what the risk appetite of our market is right now. If you take a look at investor sentiment, it's starting to improve. People are a little bit worried about that US job data. People were worried about inflation. People were worried about tariffs and all that stuff. But I think overall, the sentiment of an average investor is actually improving. And then on top of that, you take a look at the CME Fed Watch. If you take a look at that, it's telling us that 93% chances of a rate cut in September. And I've been saying that for a couple of months now, but now we can see that in the numbers. Even if you take a look at the poly market, general public are saying that 79% chances that we are going to see a rate cut at this point. Now, if we don't get the rate cut, that would be very surprising to the market. But right now, all the signals are pointing that that market is actually is expecting a rate cut. And then you take a look at the corporate earnings, right? So people were expecting that earnings going to be growing at roughly about 4%, but we got a surprise. Earnings are over 11, 12% for the second quarter. So that is really, really awesome. And then on the big shark side, a lot of these big sharks are starting to really participate in the crypto world. They are, holding on to Ethereum. They're building a reserve for crypto as well. So that is also showing you that what the risk appetite of the large funds as well. So you might be wondering, why is that? So I'm going to give you 4 reasons for that. I want to walk you through one by one, but I'm not going to go into great details because that takes too long. And then I think to really understand the proper impact of those things, you really need to spend time. See, one of the things I always tell people in investing, the biggest problem we have is conviction. We don't have a conviction. For example, if you find a good stock and we only buy one stock, even if you get it right, it's not going to have any meaningful impact on your overall portfolio. The only way you can really have a meaningful impact is you have a conviction, and you cannot buy conviction. You cannot pay me to buy conviction. You cannot subscribe to some newsletter and build conviction. You cannot, I don't know. The only way to build conviction is slowly over time as you start to pay attention to the signals, and that's how you build conviction. All right. So I'm going to talk about some of these factors. Hopefully they will make sense. And before I begin, let me just remind everyone, if I happen to talk about a particular equity or a particular sector or stock, it's not a recommendation to buy, sell, or invest in any way. I'm not an investment advisor. I don't want anybody to see me as an investment advisor. In matter of fact, don't even really see me as anyone. I just only share what I think, how I think, and what am I investing in, and how do I do it. And I share it openly in our coaching program. I take all the curtains down. I walk you through my thought process, why it is, how I arrived at a decision, how did I run the valuation, why did I pick a sector, why did I pick a company, how do I think about those things. So I talk about every single thing in a very transparent manner in the coaching group. You talk to any single member of the coaching tribe, and they'll tell you that I don't really hold anything back. Okay, so if you want to see that in real action, then that's the way to do it. So number one reason why the market is not crashing is because of retail investors. Nothing to do with valuation, nothing to do with tariffs or inflation or anything like that. You go like, what do you mean? Well, what it is that these retail investors are psychologically trained to ignore the bad news. Why did they do that? Because there's so many YouTube channels on finance these days, and they all teach the same thing. Ignore the bad news, just focus, because market goes up in the long run, always up and up and up. So I hear that so many times from people, which is true in one way. In a generic way, that is true, but that also can contribute to a bubble of an asset that should not be worth that much. No, I'm not pointing towards crypto or anything like that. Let's just talk about equities. For example, if there's a company Anyway, I'm not going to name a company, but you know what I mean, right? There are plenty of those names out there. You have probably seen them in the news in the last couple of weeks, and they just keep going up and up, up, and there's no underlying asset, there's no valuation to them. They cannot hold on to any ground, but they keep going up. Why? Because the retail investors are just keep pumping into those. But they're also pumping into good companies as well. For example, we take a look at all the tech companies. So tech sector is so bullish that average Joe, when they get out of college, they know tech sector does very well. So they don't think about what the valuation of a company is. They keep buying that company. And that's why you see them, even when they should be going down, they're not going down. So that's number one reason. Number two is to help those retail investors. Then comes our momentum investors. They also don't care about valuation. They also don't care about tariffs and what problems economies have. As long as they see a momentum in a company, they keep buying the stock. So we already got a retail investor, and on top of that, we got that momentum investor keep pushing that equity price higher and higher. And then we have our wonderful ETF investors, right? I think many of you guys are that way, where we don't care about valuation. We say, hey, every single month, every single quarter, every single year, we're going to put the money in the ETF. And that ETF already has a proportion set up how much of Apple they're going to buy versus Nvidia versus other companies, and they keep buying. They ignore the valuations altogether, and they keep buying them in that proportion. So that's another one why equities continue to go up. But then one of the surprising thing to me is sometimes my portfolio is up by 5-6% in a day, and then by the evening comes, by the time market closes, I have lost 5-6%. Like, why the heck is that happening? Like, people can't make up their mind. I can understand up and down of 1-2%, but 5% is that's just a too big of a swing. And one of the reasons behind that is these institutional algorithmic investors. So a lot of these people have been, especially recently with the AI and technology and more access to data, more processing power with GPUs, all of that has contributed that many of these hedge fund managers, institutional funds, they have built software tools to do trading for them. And there are a lot of automated as well. I'm sure they're like robo-advisors and stuff like that. You probably heard of those tools as well. And these people are pre-configured to make a decision on your behalf without thinking about what's happening in the market. So they are not really doing us much help either. So they are pre-programmed. Unless you have bought yourself something that says, hey, I'm only going to buy something of a great value. And if you did, most likely your portfolio is not doing that right now. Like, if you want to buy great value, right? Again, I'm naming a company, but it's not a recommendation to buy or sell. Take a look at United Health. Take a look at Oscar Health. Take a look at PayPal. You take a look at the valuation, like, what the heck? It's like a really good valuation, but people are not buying those stocks. People are buying stuff that is, high PE, that has no cash flow, and, people are really betting on future of technology. And that's what's happening in the market right now. It's a lot of momentum-based trading going on, but it comes with a lot of risk. One of the things we talk about in the coaching program is how do we reduce your risk? How do we manage our asset classes? How do we allocate our capital that does not get us in a lot of trouble? So let me tell you, what am I investing in? Maybe that would be helpful. I'm not going to tell you specific company, because that would not be a right thing to do for my coaching members. I think I should give them better values. I'm not giving you specific companies, but I can give you some of the sectors that I'm focused on. My number one sector is finance. So I'm very, very bullish on that. And the reason behind that is because I've been watching the economy and people keep spending. So unless people stop spending, I don't understand how financial sector is not going to make money. That's number one. Number two is interest rates, right? So sooner or later, interest rates going to get cut, and that sector is going to do really well. And number three is mortgage demand. So mortgage demand is very low right now. When the interest rate cuts happen, mortgage demand will rise and financial sector will do very, very well. And then number four is valuation. And you guys know that I like to buy stuff a little bit cheap, at least cheaper compared to other things. And I look at some of the other sectors, I feel like, okay, the financial sector is still relatively cheaper than some of the other sectors. That's another main reason why I'm heavy on financial. Number two sector is crypto. As you guys know, I don't really play directly into crypto too much, but I like to take advantage of crypto. So I'm very bullish on crypto at this point. And thanks to all my clients who have taught me to be bullish on on crypto. So by the way, if you are a heavy crypto investor and you're struggling with your tax return, certainly reach out to me. I love crypto transactions, so I'll be able to help you in advising how to reduce those capital gains or how to properly file your taxes related to crypto. So I want to take advantage of crypto, but in a different way. So I look at the companies that are beneficiary of crypto and I take advantage of them. So that's another sector I'm really, really bullish on. Those two are my favorite right now. Number three is obviously industrial. Industrial is, I think, second best performing sector for the year. So that's a good one. And number four is, I would say, semiconductors. So those are my four favorite sectors right now. I like health as well because it's undervalued, but you have to be a little bit patient to make money on that sector. So those are my favorite sectors. But if randomly just go buy every single bank or other companies that doesn't really have a reason why they are going to expand pretty soon, then I can end up losing money. For example, some of the insurance companies, they generally do very well, but right now they're struggling very well. I mean, take a look at Root, for example, or on the other hand, Lemonade. I mean, Lemonade is keep adding more and more revenue, but they sooner or later they're going to run into a trouble with loss ratio, kind of like what's happening with the healthcare. Insurance is always interesting one. It's hit and miss. You just never know when the losses come. So that's another sector that I'm watching or I'm avoiding right now, really more focus on financial in general. I think there are a lot of good reasons to be bullish in the market. You take a look at consumer sentiment is starting to improve. You're taking a look at the earnings, looks pretty good. You take a look at buybacks, by the way. I don't know if you have taken a look at buybacks recently. I think for year to date, we might be at $950 billion in buybacks. And when does company do the huge buybacks? When they think their companies are undervalued. So that's that. And then take a look at the overall market. You take a look at overall market and you'll realize that most of the earnings still coming from maybe 10 or 12 companies. The rest of the companies are not even participating. When are they going to participate? When their cost of doing business will get cheaper. That is, when the interest rate goes down. So if interest rates start to substantially come down, then the overall performance of the market will start to improve as well. So I have a lot of those reasons, and I can give you, probably many more, which I talk about in greater detail in the coaching program. So that's what's going on in the market right now. I hope you find this information helpful. And a couple of reminders. Number one, we have a webinar coming up. So that webinar going to be on foreign income, I think. So that's coming up. And then we have a Wealth Summit coming up on November 16th. We are in August, so September, October, maybe about 3 months away from today. So not that far out. I'm going to share a unique link with all the free WhatsApp group members. So you guys can certainly use that link to join, or just use my discount code. I'll put it below the video so you can use that code and register for the Wealth Summit as well. I'll strongly urge you to come to the Wealth Summit. I will be there. I'll be talking more about the coaching program. You'll be able to meet with some of the people who are currently in the coaching program right now, so you can hear from them, see what they're learning in the program as well. And then we're going to talk a whole lot about what's happening with taxes, how to protect your assets, how to grow your assets, and overall, how do we plan for 2026? So that's what Wealth Summit is going to be all about. Full day program, 8 a.m. to 8 p.m. I'll be there whole day long, so you can certainly meet me. And by the way, I will be coming to Bay Area as well on. I think I'm coming there on the 23rd. Yeah, not the next Saturday, but the week after that, on the 3rd, I'm coming. So I'll put up a link on in WhatsApp if some of you guys want to come out and meet with me in person. I'll be happy to meet with you guys as well. So I'll put a comment there. So that's what's happening in the market, guys. And if you have any questions, or concerns or whatnot, then send me a message via WhatsApp. I'll be happy to help. Once again, my website is taxcodeadvisors.com. You can reach out to me from there directly. I'll see you soon.